Hey everyone, welcome back to Corporate Decoder. Today we're diving into the proxy statement of SiriusPoint, and trust me, even with the word proxy, it's more interesting than your average insurance policy. Get ready for some behind the scenes action on how this company runs, because your retirement money might just depend on it. First, let's address the elephant in the room, or rather the fine print at the beginning. Forward-looking statements. Basically, the company is saying, hey, we're making predictions, but things might change, so don't hold us to it. They talk about future plans, profitability, and even environmental, social, and governance goals, which is just corporate speak for being a good global citizen. But remember, these are all expectations, not guarantees, and they urge you to check their annual report for all the things that could go wrong. This document, a definitive proxy statement, is basically a how-to guide for shareholders to vote on important company decisions. It's like your ballot for the corporate world, including stuff like electing directors and approving executive pay. It's crucial because it tells you exactly what's going on and how you, as a shareholder, can influence the direction of the company. This also means we're looking at all the financial and compensation details, which, let's be honest, is what everyone really cares about. Mark your calendars, the big day is May 2025. It's a virtual meeting, so no need to book a flight to Bermuda where they are headquartered, which is always a plus. You can attend the meeting online to submit questions and vote. Shareholders as of April 3, 2025 get a say, and your vote matters even if you can't make the virtual meeting. You can submit your proxy beforehand, either online, by phone, or by mail. The main things to vote on: electing directors, giving an advisory nod to executive pay, and approving the company's independent auditor. And of course, handling any other business that might pop up. Before diving into the nitty-gritty, the chairman extends an invitation, urging everyone to vote, emphasizing how committed the board is to boosting shareholder value. 2 Class 3 directors are up for election. This staggered board system means not all directors are elected every year, offering some stability which they claim is vital to growth, especially during what they call transformation and growth. Makes them less reliant on management's perspective. The nominees, Scott Egan and Sharon Ludlow, have impressive resumes. Egan is the current CEO, while Ludlow boasts over 25 years of reinsurance industry experience. Here's a quick look at the rest of the board. You have folks like Daniel Loeb of Third Point LLC bringing investment expertise, and Mehdi Mahmood with a background in financial management. It's a mix of experience that looks designed to steer the company. Corporate governance gets a shout out, emphasizing best practices like director independence, risk management oversight, and sustainability. Board evaluations are also conducted, and there are policies in place to make sure the directors are aligned with the company's long-term goals. A skills matrix reveals that the board collectively has a broad range of expertise, from board service to investment and risk management. It's a well-rounded bunch, at least on paper. Getting back to the Class 3 nominees, Scott Egan, who's also the CEO, brings a wealth of industry knowledge. Sharon Ludlow, on the other hand, offers extensive experience in both life and health and property and casualty reinsurance, and is qualified as a financial expert. Now, let's get to the money. Proposal 2 is an advisory vote on executive compensation. The board wants you to approve how they're paying the top dogs. Here is where things get interesting. I'll highlight some numbers. Looking at the summary compensation table, CEO Scott Egan's total compensation for 2024 was over 9 at Crit 3 incentive compensation. We see the chief executives all in grew substantially year over year. Did the executives deliver the performance to earn it? Here we see some additional metrics where, for example, at least 70% of the pay depends on the combined ratio. This is a crucial measure of underwriting profitability and can be seen as a way of linking the success of the executives and the shareholders. But a high level of bonuses still depends on the board's assessment of strategic goals. It's good because it gives flexibility, but it can also be abused since it's too subjective. The value of the LTI incentives for the officers range in millions and hundreds of thousands. It would be hard to comment on the reasonability of these figures, given the many components that form the number. There's a section about trading in company securities and director share ownership to prevent executives from hedging or pledging company stock. All the pieces are in place to prevent insider bad behavior. Time for the auditor's fees. PricewaterhouseCoopers billed nearly $9.1 million in 2024, an increase from the prior year. Let's focus on some interesting individual data about the people who are in charge. Sharon Ludlow is on the Audit and the Risk and Capital Management, Investment and Governance and Nominating Committee, while Bronik Musajada is on the Risk and Capital Management, Investment and Governance and Nominating Committee. It helps to understand who is doing what. If you have something to say to the board, you can email them or send mail, but be warned, the company secretary will filter out junk mail. The Audit Committee also has a hotline for confidential reports. Here's the ownership breakdown. Big names like BlackRock, Daniel Loeb, and Wellington Management Group control significant chunks of the company. Daniel Loeb, through various entities, has a sizable holding. We can guess what that might mean. This is how the major shareholders can be expected to vote and influence the direction of the company. The company's environmental and social responsibility efforts are worth mentioning as well. They've got policies in place aiming to reduce climate risk and comply with regulatory standards. They prohibit hedging and pledging transactions in company securities by executive officers, directors, and employees. This is good practice. The company's Risk and Capital Management Committee and the board discussed the company's approach to overseeing cybersecurity threats with the company's Chief Information Security Officer, CISO, and other members of senior management. This is a growing trend as cybersecurity is becoming a concern to companies. This entire voting and meeting section, as tedious as it sounds, is a summary of your rights as a shareholder. Remember that the most important one is this: if you vote over the internet or by telephone, you do not need to return your proxy card or voting instruction form. Now, what's the real story here? SiriusPoint appears to be committed to improving its performance and aligning executive compensation with shareholder value. A few key factors stand out. The focus on corporate governance and environmental responsibility is a definite positive. Having strong risk management oversight, especially around cybersecurity, is smart as these issues are growing in importance. However, there are some items to monitor. Executive compensation seems high, and while they're tying pay to performance, there's still a lot of subjective discretion in those bonuses. Those large holdings from a few major shareholders like Third Point could concentrate power and sway decisions. In conclusion, SiriusPoint is making strides, and on paper they have a solid plan, but it's up to shareholders to hold them accountable and make sure those fancy words translate into actual value. Thanks for tuning in to Corporate Decoder. Don't forget to like, subscribe, and let me know what you think in the comments below. Until next time, keep those investments smart and your eyes open.